You're with us here on a fresh new edition of Midcap Radar, 1:30 p.m. The market's down about 55 points. With me, my colleague Rima Tendulkar. Hi Rima. Not very much has changed since the morning. It's been choppy and a little all over the place.
Absolutely, and the stocks which are moving up are the ones which have gotten hit hard. So take a look at Bharti Airtel. That, remember, had a big fall from levels of 600 plus down to below 400 levels. Just in the last few days, the stock has started recovering, so now at 428. And Britannia is a stock which lost about 8 to 9% in the last 3 trading sessions after the earnings disappointed a bit. So Britannia is showing a bit of a bounce back. Hero MotoCorp is reacting. I guess Bajaj Auto's numbers are out. The numbers are muted. In line with expectations, but Bajaj Auto stock is flat with a negative bias, but it's the Hero MotoCorp stock which is under pressure. In fact, that's the top loser, down close to about 3%. We'll drill it down to individual stocks, get in some technical trading ideas as well. Before that, a run through of the top headlines at 1:30. The markets come off the day's low. Heavyweights like Reliance Industries, HDFC Twins and ICICI Bank are the key drags, while pharma and auto stocks are also under pressure. Mid-caps fare slightly better than large caps.
DRL recouped some morning losses after the company confirms that they have detected a cyber attack, but their plants are not shut. Says all services will be up within the next 24 hours. Aurobindo Pharma declines today after receiving a US FDA warning letter for its New Jersey unit.
Another round of interest rate cuts by home financiers and a marquee office rental deal by DLF provide the necessary impetus for an up move in real estate stocks.
Bajaj Auto reports are largely in line set of earnings. Reversal of export incentives impacts margins, but management commentary is positive. Now all eyes are on Asian Paints, which is expected to report a good quarter with domestic volume growth seen between 7 to 8%. Numbers expected over the next 2 hours. Okay, some technical ideas now. Himanshu Gupta of Globe Capital is with us for a technical check. Thanks very much, Himanshu. Oscillating between being down, 65, 70 points, then there is a recovery down 35, 38 points now. A bit of hesitation direction-wise now, Himanshu, or you think things are still clear?
Good afternoon, Prashant and Rima. Well, see, Prashant, if you look at the price action of Nifty from last 3 or 4 occasions, it has actually struggled to take out that 12,000 zone. And that is giving us some kind of a signal that it might take some time before we actually move out above that level. Until the time that happens, there is a possibility that we might enter into a sideways choppy kind of situation, and the market may oscillate within a trading range of 11,950, 970 on the upside and 11,700, 750 on the lower side. So I think it remains to be seen that for how long the market is not willing to move above the 12,000 zone. Until that time it happens, I think we are heading for a sideways choppy kind of market. Similarly for Bank Nifty also, Prashant, I think 24,800, 24,850 were the short-term targets that we were working upon, and since those have been achieved, so I think there is a possibility that 24,200, 24,300 on the lower side and 24,700 on the upside turns out to be the range in the near term. So my sense is that till the time we see a decisive break above 11,950, 970 on the Nifty and 24,800 on the Bank Nifty, we are heading for a sideways chopping kind of situation.
Himanshu, what about individual trades? What are the recommendations?
Yeah, Rima. So the first long on L&T, the stock looks to have given a breakout in today's session, and I think the positioning is suggesting that the stock can move up higher from the current levels. So L&T can be bought around current levels of 930, 932 for a target price of 960, and a stop loss below 924 can be placed for the day. I have a short call on Indigo. The stock is suggesting that it is facing some kind of resistance in the supply at higher zones. So we might see stock coming down to lower levels. So Indigo is a short sell for a target price of 1325 and a stop loss above 1365. And finally, a buy call in the cash segment mid-cap stock, IRB Infra. It's a buy for a target price of 125 and a stop loss below 110.
Thanks, Himanshu, for joining in. So markets facing some resistance at that 12,000 mark. Let's get you some market opinion. Earlier today, we had a chat with Tushar Pradhan, the CIO of HSBC Global Asset Management, and he says the markets are sending confusing signals. Listen in to his opinion.
Market is at a very, very, I would say, confusing state. And when is it not? But clearly, the valuations have now almost reverted to where it was pre-COVID. Knowing that FY21 earnings are nowhere near the estimate that we were in February before it all began. So in the face of an absolute wipeout in earnings for this current year, having the market exactly where it is when it all began is very confusing. The earnings will come back, the economy will limp back, but what is the speed at which it will do? My favorite concern here is that it's not going to be a uniform recovery. As a financial, if I'm well known, if I have access to capital, I clearly am in a much better position to access capital at a much lower cost and deploy it at more or less market rates, what everybody else is lending at, right? So clearly there's an advantage for the more secure, more, I would say, reputed, larger, more better capitalized financial company.
Okay, that is opinion which we are getting from market participants. Well, we're down 60 now, so there is once again a slip. So it's not, I mean, the range is not very large, as you can see very well on the intraday. So the highs are similarly around 11,900 or so, and then from there is a slip. We go down and then to about 11,850 or so. So basically in that range, 50-60 odd point range from the morning, but several ups and downs. This festive season, CNBC-TV18 brings you important market lessons from masters of Dalal Street. Here is Pratik Gupta of Kotak Securities with an important tip that you should keep in mind as you approach markets. Listen in.
Welcome back. Bajaj Auto reported numbers a while back. Revenues were down 2%. The reversal of the export incentive scheme has impacted the margins for the company. So margins have come in at 17.7%, and that is driving about an 18% drop in the company's profitability. Rakesh Sharma of Bajaj Auto, the ED of the company, now joins in. Mr. Sharma, afternoon, and thanks so much for joining in. First, let me start with on the margins. What, according to you, will be the recurring margins of Bajaj Auto? Because as of now, at least, this cap on the MEIS or the export incentive scheme stays. So what, according to you, would be the recurring margins going ahead?
Well, good afternoon. Thank you very much. But the question you asked is a very important one. And if you will allow me a minute or so, to explain to you that to begin with, the margin structure of Bajaj Auto is a very complex one. It's a blended margin between businesses which are international and domestic, spread over many geographies, as a result of which geographic mix and the BU level mix plays a very big, has a very big impact. And compared to last year, this year we have faced several headwinds in managing the margin, and these are very unexpected. Of course, the expected one, compared to last year, Forex realizations were down. Three-wheeler business, which is a very profitable business for us, that was down. But we had a very big and abrupt impact of the withdrawal of MEIS, and in keeping with abundant caution, we have made provisions for not getting any of MEIS benefit, which was about 2% at all. So despite these strong headwinds, the business has been actually able to come in with an improved margin performance. And while we don't get into segmental level margins, I can tell you that in some of our biggest businesses, for example, domestic business, motorcycle business, there's been a virtual turnaround of the margin situation. So we are very delighted that the building block of this ultimately blended margin is actually now at a all-time high kind of a position. Now, this has been achieved by doing two or three things, which we had started to do 6 months back. The first is a very strong focus in building our premium brands, Pulsar, right across the world, and most importantly in India. So we have had the highest ever sale of Pulsars in this situation this quarter. We have never achieved in domestic and overseas markets this level of Pulsar sales, and that actually has really impacted the margins in a positive way. Second thing is we have managed to create through the Pulsar 125 a new segment. In fact, I think we have expanded the industry, the 125cc segment, which is again more profitable than the 100cc. Then at the ultra premium level, which is our KTMs and the Dominars, from almost nothing, we are now clocking a rate of 10,000, 12,000 units per month, which is sort of challenging the leader, which is at about 40, 45,000. So, and finally, some of the underperforming, margin-wise underperforming models in our portfolio have been ruthlessly streamlined, prices have been increased, and so in combination, all this has served to deal with the headwinds and still come out with a margin performance which is obviously improvement over last quarter and even the same quarter last year. So therefore, because it has occurred at such a fundamental level, we are, and despite the price increases, raw material price increases, which are in the offing, we are very optimistic that we should be able to be around this level. We think some of the headwinds are there, but some of the tailwinds that you might encounter are the three-wheeler business should start improving, albeit at a slower pace. We hope that the government, which has announced things like the rod tape, etc., some of that will start to come into play in Q3, Q4, and we should get some benefit of that. And coupled with all that we have achieved, I think we should, at a business unit level, continue to do quite well on the margin front. But yes, the blended margin is ultimately, depends on the geographies and the mix of the BUs.
Mr. Sharma, hi, good afternoon. Prashant here. That's a very fleshed out answer and gives us a fair bit of idea about what's happening. Just one quick thing. For MEIS, any provisions you've made for the second half and what could be, so you said the impact is about 2%. So what should we expect at the net level, the impact in H2, and also if any provisions have been made? And you began by saying that domestic business margins are almost back at all-time highs, new highs. If you could just tell us, does it tie in, are the reasons what you described, which is sort of premiumization across the product line, which is enabling you to do that?
Yes, so tackling the MEIS point first, the MEIS was 2% level, and it has been withdrawn, but it's not completely clear whether it is completely with retrospective effect or it's only prospective effect. We are still seeking clarification, but as a matter of abundant caution, what we have done is we have assumed that we have not got, we will not be getting the MEIS for the April-June quarter and made provisions for it, but that would, be very disappointing if that really occurs because we've already been in the market with those prices. Secondly, we have examined very carefully where all we could pass it on. So we have the cost increase because of the withdrawal has already been priced in almost, I would say, from September onward in a majority of our international markets. And this has been a very difficult exercise because on the other side, we are dealing with Chinese brands and Japanese brands sourced out of China, which have seen a huge revival, and it's a real intense competitive fight over there. And so we have had to be very careful about passing this on, but we have indeed passed on the MEIS benefit. Therefore, if we get some relief from the rod tape, which is aimed at mitigating the taxes on taxes and other inputs, So if that occurs, yes, it will provide us some relief from competitive pressure in these markets which are reviving, and we are battling the Chinese and Chinese brands. Now, coming to the other point which you made, what I said was the domestic motorcycles business, because of the strong emphasis on the Pulsar brand and the housekeeping which we have done in the commuter brand, has indeed resulted in a very significant improvement in profitability. And yes, it is at an all-time high, and I think we should be able to sustain it. And I must say that the price rationalizations which have happened in the commuter side have been done on the basis of improved product and proposition presentation. So it is not just a price increase, but it is bringing new propositions, meaningful propositions to the market, on the back of which we have been able to improve our margins.
Mr. Sharma, if I may just request you to stay with us. We need to slip into a mandatory commercial break, a short one, but we'll be back with more questions and answers, so do stay with us. Rakesh Sharma, the ED of Bajaj Auto, on their Q2 numbers and the outlook for the coming quarters. Mr. Sharma, thank you so much for staying on. The H1 volumes were down about 38%. I understand that the worst of the COVID impact took place in Q1 and then subsequently a little bit in Q2 as well. But in your press release, you have said that the early signs show a strong indication of a festive recovery. Would you like to put some number to that? What could be the volume outlook for the company, both for domestic markets as well as exports, for the second half of the year?
Well, I can tell you, first let me tell you about exports. We have slightly better visibility over there. We had our highest ever exports in September. And I think with a few days to go, I can say with certainty that October performance will beat September performance. And if you do not have any supply chain issues and transport interruptions, then in November we will beat October in exports. So it will be 3 months of, setting all-time high records. So things are going pretty well. It means that business is returning to normalcy in many parts of the world very quickly, and the agile supply chains have to respond to that, which is what is happening. In the domestic side, on the motorcycles, we saw a smart recovery and in the period of June, July, August, and a little bit of a slowdown again in September. And according to our estimates, industry sort of reached at about 90% of its previous year same period. Now we're 5 days into the festive season, so it's like, obviously we are all very, very keenly observing the progression, but it's very difficult to make predictions at this point of time. I won't say that the festive has started in a rip-roaring way. It is only a slight improvement in walk-ins, inquiries, and sales over the same period last year, which, date-wise was different. But we have to wait and see how that goes. But I would say that if it sort of matches last year or is marginally better than last year, that would be good. That would be a good signal. The issue is really once the arrival of a vehicle in an Indian household is still a very celebratory thing. And once this natural optimism fades away after the festive, we have to really see post-festive, by when all the pent-up demand would have exhausted itself and the economic contraction would be in full play and the festive optimism would be gone, how the industry responds, how demand responds to that. That for us is a far more serious thing to consider.
Yeah. No, but that's also telling what you said, Mr. Sharma, that even if in the festive season you're able to do if the industry is able to do what they did the same time last year, I mean, that would be that would be good for the industry per se overall. So, and of course, what happens after that, as you said, is anyone's guess at this stage. Just one quick question on domestic market share. In H1, that's about 18.2%. So it's remained static as compared to H1 of last year. You've said you want to get to 20%. Could you, do you have any thoughts on this? Because there is also, of course, competition, which is, gunning for market share. Any thoughts, any roadmap, timelines to get to that 20% number?
Yeah, so of course, it is certainly a number where you can see there is a big scope for improvement and performance for us. And we, of course, want to increase it. But, given this environment, we want to increase it in the right way because demand is uncertain, consumer is cautious. We do not want to compromise margins and the company's profitability and vitality in these times. And the profitability of a company is a strong indicator of its vitality. We do not want to compromise that in pursuit of market share. We think we can still do it. H1 was a period of churn in terms of reshaping the portfolio and launching, widening the Pulsar franchise. We will continue on this, and I think the way the customers have responded in August, in Q2, I think we should be able to keep chipping away at the market share. Now, exactly what it will turn out to be and how much time it will take is very difficult to answer given the backdrop of uncertainty.
Mr. Sharma, always a pleasure speaking with you. Stay safe. Have a good festive season. Thank you so much for joining in. That's Bajaj Auto for you. The stock is flat today, but on a year-to-date basis, Bajaj Auto has underperformed its peer Hero MotoCorp by nearly 30%. With that, we've run out of time completely on Midcap Radar. Thanks so much for watching. Stay tuned. Your Stocks is up next.